Hey, welcome to the afternoon stream. It is May 20th. The market has closed and it was a down day on Wall Street. It could have been worse. I think stocks mounted a small comeback toward the bottom half of the day, but it wasn't enough to just turn it into a green day. We had some stocks that ended up doing quite poorly. Google is probably of the big stocks, the worst one of the bunch. Google was down quite a bit. Um, and Amazon was down 1.02. Apple was down 1.01. And Apple's been on a pretty steady losing streak. We'll see how that stock turns around, if it ever does, or if it's just going to keep going down. Healthcare has been catching a little rally. United Healthcare has been up really nicely over the last 4 trading days. Go United Healthcare. Good to see that they're kind of bouncing back after being completely written off. And their peers, Elevance and CVS, are also doing well. So that was good. That was a good area of the market. Even Pfizer caught a little bit of a rally today. Man, that is good. Good to see that. That's the reason why you diversify, right? Diversification enables you to have a more consistent performance by buying quality stocks across different sectors and different industries. So that way, when you have some of your stocks go down, maybe some other stocks pick you up and you limit your losses on a day like this. And that's the reason for diversification. But there's never a substitute for good quality companies that have very good fundamentals. Don't diversify quality companies across sectors, and don't ever go into sectors you don't understand. If I don't understand it, I don't touch it. It's like, hey, I can't make a good decision if I don't understand that company, that industry. So I try to stay within a sphere of competence, companies that I can really understand and work with. So consumer staples did well, but I'm not a big fan of that area. I only own Kroger. Everything else is kind of proven to be a laggard when it comes to long-term returns. So I don't want I don't want the low performance over the long haul, just so I could feel good on a down year. I'd rather go into bonds versus consumer staples. So that's what's happening broadly. One more point is, I think Berkshire is, ever since the meeting and Warren Buffett announced his retirement, I guess, or that he was going to turn things over to the new CEO, the stock hasn't done all that great. I think let me take a peek at it and see if my logic holds up, because it just seems like ever since the meeting, the stock hasn't done all that great. Over the last month, up 0.36, but it's had from May 2nd to May 20th, it's down 5.75. And the meeting, I think, was May 5th, or it was early May, I think. So let me double check that. And I will check it on Google search. When was May 3rd. So May 3rd, and the reason I was thinking May 5th was the 5th was the first trading day after the meeting, and that's why I was thinking the 5th. So the meeting happened, and it wasn't a pretty sight. And they also announced their earnings. So now it's not a horrible like last 18 days, but it is bad. And maybe the news is being processed by a lot of investors that are like, man, Berkshire Hathaway without Warren Buffett. Let me get my head around that. I don't quite like that idea, but here we go. There's no way around it. He's awesome, but he's 94, going on 95. All right, so that is interesting. It looks like Sergio's on. Thoughts on Google I/O. So I think you're referring to my Android device, and so far so good. I got it yesterday, and I guess I'll. This is the guy here, and on Thursday I'll be kind of doing my mobile app demos on that device. So far so good. I got a little more of a bigger screen, and it's a faster phone. The processing speed is much better. So we'll see. I think if you ask me in a year, I can give you a real informed review and opinion. Uh, Apple versus Android. We'll see. Saeed, how are you, sir? So I'm not able to join the channel. Tried to pay via PayPal and credit cards. Man, I'm sorry you're struggling with that. You're from SX Cool. Thank you so much for joining. Well, I'll tell you what. Dig up my email. We'll figure something out. If you want to join, we'll figure something out. Reach out to me. We'll see how you can get. You can become a member. If you have Venmo, we can make that happen. I also have a PayPal account, by the way. So my wife has a business, so I can take care of it that way, and then get you to be a member. So thanks so much for trying, and I'm sorry you struggled with it, and I really appreciate your support. So look me up. My email is on pretty much the homepage. Look at the other information, and it's Victor H Investing at gmail.com. If you want to note that, send me an email. We'll figure it out, and then we'll get you going. Sergio, no, not your Android device. It was Google Meeting. It was a Google Meeting. Okay. Okay. So there was a Google Meeting today. I know there was a couple of announcements. Sorry, I was on the wrong track. Sorry, Sergio. So they had a couple of announcements. They have this $250 per month VIP AI subscription service, and you're able to use a bunch of tools, which include you're able to create video with sound, which sounds pretty interesting. It's not something that I would do because there's no need for me unless it could replace me and it could do my videos. maybe I need to look into it. We'll see. So I saw that, but what other meeting were you referring to? So then here's Google launches VEO3, an AI video generator that incorporates audio. That's what I was talking about earlier. So they're really going all the way with AI. So that's good to see. And I don't recall, Sergio, are you a Google shareholder? Yeah, and I think the whole world is kind of trying to figure out AI, right? And I don't know what the meeting. I'm sorry, I don't know how AI is going to exactly work. I know that you know OpenAI would like to think that it's going to be a chat bot that has all these capabilities, maybe, but you know the beginnings of like social apps, the first to market was not the one that won. It was actually the second big company to market. MySpace was number one before Facebook, but MySpace made some errors, and then Facebook kind of learned from their mistakes and then took off. You look at search. Google's not the first to get to search. They were like number 100, but they figured out what was most important, and they mastered it. They've done it the best over the last 20 years. So that's I don't know where AI is going to go, but I don't think anybody knows exactly, and I don't think OpenAI knows. I don't think X knows through Grok. I don't even think Google knows. It's going to have to evolve quickly, and we'll see if it works. I can just say that, like most of my work, and maybe I'm not the average person, but I could tell you, most of I do a lot of analysis and searches and so forth, And I find that AI is good, and maybe we can give it a quick test here, but oftentimes it gives me answers that are not great. I'm going to go with Gemini. I'm going to go with Meta. And we'll even go with OpenAI. And OpenAI, what's great about it is it gives you a lot of information, but oftentimes it's the information you have to double check. So I don't know if you guys get any hallucinations when you guys ask for things, but so summarize the earnings that were, and I got to spell correctly. Summarize. So summarize your earnings, and I should say the earnings release. So let's see what OpenAI has to say about summarizing the earnings that were just released today for Palo Alto. I looked at them, so I kind of know what happened. Let's take a look. So it reported its third quarter, very good. Revenue's up 15%. Excellent. Nice job. So just nailed it. Nice job. Nice job, OpenAI. So the next one we're going to go to is, let's see what Meta has to say about it. See whose AI is going to win this little race. So this one is also good. It just kind of gave me more summarized information along with some consensus data, but it did get their the revenue correctly. So that looks good. I thought OpenAI gave me a better answer than that one. And then now in this case here, I like reading the earnings release because I kind of take it in and I kind of digest the whole thing. So and this one's pretty good too. So Gemini did a nice job. And they all nailed the details. Very good job. Good job to all of them. But when I like to read the earnings because it gives me all the context, right? This flows so an investor reads it. So it's not like I'm going to an AI app and asking it to do what I like to do. I like to go through the statement, look at the guidance, look at the financials, and so forth, and then process it with my human brain. But they did a nice job, and I have to say, OpenAI and Gemini did a really nice job. And Meta, I think, got a passing grade, but just with a C. So, all right. So, yeah, you're mentioning this AI event. I know they had a couple of announcements, and I didn't focus in on it today, but that's it. I know that they had those announcements, but they've been working on AI pretty intensely. Mohammed, how are you? Good to see you. Eric, what are my thoughts on Palo Alto Networks? So in general, their revenue grew really nice, but kind of a general comment is that it's Palo Alto is a quality business, but it's priced too high. Over the last 5 years, it's up 390%. And when you look at their revenue growth, it's not overly exciting. It's 15%. And they're still relatively small compared to other giant software companies. So they're down to 14% in the trailing 12 months. Now, that's not like, wow, that's incredible kind of growth. No, you want to see that, you go to other stocks. This one's right there with like Adobe, Microsoft. I mean, I could give you a list of 10 software companies that are growing at that rate, but those 10 software companies don't have PEs at 111. You're not paying, 16 times price to sales. You're paying like 8, 7. So you can get far better value looking at other software companies. And for some reason, investors they just love cybersecurity. I can understand that, but we got to be careful because there is a graphic that, let's see if I still have it. No, I don't. Anyway, so where I was going to go is the cybersecurity space is competitive. And one of the things that is reality is if you look at who the leader was 5 years ago, they're no longer the leader. If you look at 10 years ago, they're no longer the leader. And then if you look at 20 years ago, those companies literally don't exist. It's like, it's just McAfee. Remember, McAfee was a dominant. Where are they? They don't exist anymore. And cybersecurity just constantly gets changed because the hackers, once you have a particular way of intruding and cracking into systems, the hackers change. They're like, all right, well, they're stopping us when we do that. Let's do something different. So it's not like a long-term play. Like when we go to a Microsoft, these guys have been dominant for 40 years. They're going to be dominant for another 40 years. Palo Alto, I can't say that. They have a lot of competition, including Microsoft, Amazon with AWS, and Google bought a company so they could provide cybersecurity to their customers that use Google Cloud. So now Google is going to compete, take some of that addressable market away from Palo Alto. So in general, Palo Alto is priced too high. That's my conclusion. I did a member video doing full analysis on Palo Alto. If you'd like to see it, become a member. You can see that full detail. Put a lot of detail into that. Hopefully the members got a lot out of it. And I released it like within 20, 30 minutes of the earnings coming out. So I did it as quickly as I could. So let's take a look here. Android PC, how are you doing? So Sergio, you think ChatGPT is the best one? Use it every day and it's free. Cool. Now, quick question. Don't you run out of like tokens? Like after you do like 5 or 10, or I forgot how many, they go, okay, you can't use any more freebies. You got to pay. I know my son has a subscription. He's 20 going on 21. And so that's been my experience. I don't know if it's like that in Portugal. The Pelosi effect. I don't really follow that, but maybe. Yeah, Sentinel-1 is a good example. Sentinel-1, and I don't know that Sentinel-1 is a great buy, but that's another competitor to Palo Alto. So Palo Alto has to deal with CrowdStrike, Sentinel-1, Zscaler. There's like 10 or more competitors in that space. There's no dominant one, and it won't be dominant because as soon as somebody gets it, gets all the intrusions, the bad guys go, okay, don't do that anymore. Try something else. And then you have to, go to a different vendor to get that type of security. All right. So there were some earnings, and we just talked about one of them, Palo Alto. Keysight Technologies. I don't know what these guys do, but it looks interesting. Then I've got 3 stocks that members wanted me to look at that we're going to jump into right after this one. So these guys, Keysight Technologies offers electronic design test solutions worldwide. It operates 2 segments, Communication Solutions Group and Electronic Industrial Solutions Group. It offers oscilloscopes. So these guys are instruments, right? Scientific and technical instruments. Got it. Okay. All right. $28 billion in market cap. Revenue is 5.1. So you're getting it for less than 6 times sales. P ratio is a little high at 38. We'll see how their growth looks. And analysts think it's a buy, 11% discount. And these guys are contracting. So I don't know why I would pay a high PE for a company that's just contracting like that. Now, the current quarter did expand nicely, 7.4, but you got a lot of red here. What's going on here? And instruments, right? If we're going into some type of recession, is that going to slow down the sale of these instruments? Will companies begin to tighten up their budgets around capital expense? This company is producing good cash flow, 1.346 billion. They have decent gross margins, good profit margin, good free cash flow margin. Looks good. So they are beginning to grow. So I would probably go I'd pay maybe 15 times free cash flow minus debt. So that would be roughly 20 billion minus debt. So let's see what kind of debt they have. See if they have any debt. They do not have any debt. So they're worth about $20 billion in market cap, and they're way up there at 28. Over the last year, they're up 3.5%, 70% over the last 5 years. So this one hasn't been a super winner. It's kind of gone sideways for 3-4 years, and it's had some really bad pullbacks. So this one here is a pass. I think it's priced too high, and there's nothing exciting going on. There was a lot of red on the revenue growth. So I think there's something going on with them not being able to grow. So they announced today the market is rallying up. I think it liked that revenue growth that it saw at 7.4 revenue growth, but that's not enough for me. I think the stock's worth about 20, maybe 21 billion. And I need to get a discount because this is not a special company. I never heard of it, right? And I'd probably need like a 30-40% discount on a stock like this in order for me to go into it, because it's not going to be recognized by a lot of investors. It's not a name brand. It's not like, hey, this is like Amazon. No, it's not. Investors are not going to be comfortable with a company they've never heard of. So I'd have to be careful with it. All right, so that is the earnings on that one. Let's jump into some of the requests from members. The first one is DSP. This is Viant Technology. And Viant Technology, what did it do today? It was down 2.85. This is a smaller software company. It does, I call it marketing automation. And when you're trying to put ads on different media channels and you're trying to, advertise as a company, you use this software application to do that. And this is a small business, and it's a small cap, $916 million of market cap. Revenue, 306. You're paying 3 times sales for the company. Really high PE. Is there really good growth? I'm going to show you in a bit. Strong buy with a discount of 48%. And they do have good growth, 30%. Now, they are small, so I'd like to see them expand that growth. 32%, we're heading the right direction. 39% the quarter before. It looks good. So that's a good grower. And they do produce cash flow, which is very good. When you have a young business like this produce cash flow, it goes to show that this is a valuable business because they inherently produce cash flow. It's not just going to be a cash burner forever. We don't want that. We want them to generate some cash and deliver it back to that balance sheet. Gross margins, 45%. And these guys operate more of a service-based technology company. And free cash flow, 13.5. I think as they get bigger, this margin is going to expand. It has been expanding a little bit. But if they get much bigger, I think they could probably rise to 60%. And their free cash flow is also going to rise. So this one here is a good stock. Let's see what it's been doing over the last month. So last month, it's up 22%. That's really good. It's had a bad day or day and a half. But overall, I mean, who wouldn't want 22% over the last month? I'm good with that. So I think Viant is good. I don't have a big position in Viant. I'm a stockholder. I have a about a $9,000 position. I'm good there. Just want to get more information. They're tiny. If they come out with a very good earnings next go around, I'll maybe put another 5,000 into it. But I think they're an exciting company. I think they could really become something and probably also be a takeover target. I think other businesses would want to acquire their technology and their customer base. So that is Viant. So that was one of the requests. It looks good. I don't know why. I think there was a pullback over the last 2 days. No big deal. I don't think that's a big deal at all. So that was Viant. Now let's take a look at Halo. Now, healthcare has really been beat up. And here is Halo. Over the past year, this one's up 19.55, but look at this volatility. Holy smokes, it just fell off a cliff here. After it had really gone up on a nice run, it just fell off a cliff. And it was the last earnings, and I'll get to that in a bit. This has a nice market cap of 6.59 billion, revenue is 1.08, so you're paying about 6 times revenue. And PE ratio is really low at 14. Forward PE is really low, less than 10. It's a buy with a discount of 19%. Now, what caught my attention, it was they grew 35.22%, but there was something going on with the quarter, if I recall. So free cash flow looks good. Gross margin looks great, 80%. Profit margin looks stupendous. Everything looks good on this stock. Halo looks awesome. Why does the market abuse this stock? Everything looks good. It announced earnings. It had very good growth. So not sure what stories out there that made the stock really crater. Yeah, I think Halo is a really good opportunity. So I have a buy on Halo. Everything looks good. And one of the members wanted me to look at DSP and Halo. All right, let me check the chat here, see what's going on. James Sketcher, how you doing, man? Wakefield, Great Britain. Very good to see you. Thanks for joining. Must be kind of late in Great Britain. And I think I saw somebody from Essex, so Night Owls. What do I think about Nebius? I'm not really familiar with Nebius. Greg Allen. Yeah, I appreciate the comment. Thanks for saying that. And I'm glad that my analysis you find interesting. Hopefully it's helpful to you. Yeah, Halo, I just covered that. And my thoughts are it's a really good stock, really good company. Really, I have a buy on it. I analyze it. And if you guys wanted to see my detail on my analysis, I publish it out to the channel. And basically once a month, they get a full listing of all the valuations that I do and all the latest and greatest. Each month I updated. I just updated it yesterday. So if you're interested in seeing that type of information, join the channel. You can see that information. Hopefully it gives you a good example, that I've been performing and trying to get a good handle on what valuations are for these companies. Because remember, you can have a company with a really good story, but you got to look at fundamentals, because there's a lot of good stories out there for companies that just don't make a lot of money, don't generate a lot of cash. And those companies are going to be, they're not going to be as valuable as companies that have a great story, a great future, and produce a lot of cash flow and produce a lot of profits and have terrific balance sheets. So that's why the analysis is needed for us to separate quality from just a company or maybe a risky company and avoid a mistake. So give it some thought. All right. So I got through the 2 stocks that I promised somebody I would cover, and let's go over Applied Materials. Applied Materials announced, and they did have a good earnings, but for some reason the market just didn't like it. And I think they announced last week. This is where they announced. And the market sold them off. Oof, I don't know that they deserve that. But life is not fair, I've been told. And Applied Materials. So if we look at their earnings were decent, up 6%. This is a larger company, right? $28 billion in revenue. If we look at the quarterly, up 6.83, which is a good quarter. They're selling a lot of the machinery and materials to semiconductor foundries. So that's their customer. And their customer, a lot of them are in Asia because that's where the foundries are. So that was very good growth. I thought the quarter was good. Had good cash flow. Look at that, $1 billion, and gross margins of 49%. They expanded them from previous quarters. Profit margin of 30%, free cash flow margin of 15%. So I thought the quarter was good. Now they did guide with the kind of a less than confident posture, and they weren't very confident about the guidance. And I think that's why Applied Materials was kind of sold off. But overall, I think it's a terrific stock. I think long term, the stock should work. It's up almost 200% over the 5-year, and it's had a really big pullback. Semiconductors are here to stay. We're going to need more of them in the future. And Applied Materials is kind of, they supply that industry a lot of the materials and machinery. So they're going to have a lot of demand for a long time. So I like their story going forward, and their fundamentals look good. So I took a peek at that because I know another member owns Applied Material, and he was surprised as to the sell-off because after the earnings look good. But again, the guidance, I think, is what caused investors to sell off. Yeah, and I think the reports were good. And I think the catalyst that investors are looking for is like, what is going to cause their growth, right? So the story just didn't have a long-term prosperous path, and that's why the stock sold off. But the fundamentals look good. Now, one thing we find ourselves in, right, is we've been operating with a market this year that had a substantial correction. The S&P was down close to 19% from its high. And then the market recovered very quickly. In my opinion, maybe a little too quickly. It was like too easy. Like, wait a second. We went down fast and we recovered fast. And maybe it would have been more productive to kind of, be in a bear market longer. That way more discipline enters the market. That way investors appreciate good fundamentals. But nope, we went down fast and we came up fast, which now I think there's some stocks that are euphoric. And I released a video today on what I think are 5 of the most expensive stocks in the market. There's just too much euphoria in those stocks. And I think at some point, most of those are going to really punish investors by really beginning a sell-off. We'll see. But I think this market has really bounced back. So I like seeing my portfolio, up year to date, a little over 10%. Great. But it just feels a little bit like, hey, that was too easy. 2022 wasn't easy. It took over a year for the market to finally turn and start going up. But when it went up, it didn't stop for more than 2 years. Now that was fun. So I don't know that we're going to have a long-term appreciation, but maybe we go sideways for the rest of the year. I don't know. I'm positioned in really good companies, and I'm fine with wherever the market goes. If it decides to sell off, I've got cash. I can buy some stocks. If it keeps rallying up, I'll just look at the appreciation of my portfolio and be glad that I am invested. So that's the market we've been dealing with. Now, let's look at the sectors. We had utilities is number 1 of all sectors. Materials, number 2. I've been getting into more materials companies because I think materials are going to do well. Staples, 3. Financials, 4. Worst sector is energy, then consumer discretionary. No big surprise. When we look at the big giant stocks, Microsoft is on top with a $3.4 trillion valuation. Year to date, they're up 8.7. NVIDIA's in second place, just basically even with where the stock started the year. Apple's been on the pain train, going down consistently. Geez, let's take a look at that chart after I go through this. Google's been on the pain train. Maybe not as bad as Apple, but that's painful. I could tell you firsthand because I'm a Google stockholder. And Tesla's been down quite a bit. But let's take a look at Apple and see what that chart looks like. Yeah, it doesn't look pretty. It's really sold off. And there's been some really scary stories. Like if the US got in a real bad fight with China, that's where Apple depends on China to produce its iPhones. That's scary. And the competition keeps getting better. So Apple selling internationally, that's a tough battle for them. I can tell you, I switched from Apple back to Samsung because I was on Samsung before Apple. And in my opinion, I'm not an expert. I'm just a guy. The Samsung device was better than the iPhone. And I stayed on the iPhone because my family's on Apple. But at this point, I'm like, you know what? I want to go back to Samsung. So I'm going to be a black sheep. And we'll see if my family will put up with me or if they'll stop texting me. We'll see. So far, so good. They're responding to my text messages, and I'm one day into it. So I'm optimistic the communication is going to continue. But you see, Apple is just having a tough time, and I don't know that they're out of the woods. And what is Apple going to do to grow? What are they going to do to grow? There's nothing exciting in the pipeline. You got iPhones, and that's it. And they can't sell a lot more iPhones. Their growth trailing 12 months, 4.9. That's it, 4.9. That's not exciting. And it's been single digit, and little by little, they're increasing services. They're increasing this, they're increasing that, but they don't have any big catalyst. They don't have a big product in the pipeline. They've come out with some gimmicky products like the whole virtual reality goggles that are like $35,000 or $4,000, $3,500 or $4,000. Well, that was a gimmicky product. They don't have much of anything. They didn't have an AI strategy. So now they're trying to adapt and do their marketing. Oh, it's going to be Apple Intelligence. They're kind of late to that party. So I don't know. I think Apple is vulnerable, and I'm not excited about the stock. I think it's pretty boring. I mean, an equivalent company is Microsoft, and let's take a look at their growth rate, and I'll show you why Microsoft just seems on paper, it looks better. Look at this growth, double digit, and they're massive like Apple. But that's what a company should be doing, introducing new products, continuing to grow, figuring out what's around the corner, figuring out how they can have a productive 5-year plan. I just don't think Apple has much. It's pretty surprising because it's a world-class organization, but maybe they rested on their laurels too much. We'll see. So that is Apple. Curious to see what's going to happen to that legendary stock. All right, so I'm caught up on the chat. I'm caught up on my videos, and it looks like it's going to be a smooth, easy night for me. I already got that email. I'll respond to, was it the person? Was it Saeed? Yeah. I'll get on my email right after this stream and let you know. So before I tune out, let me just take you to my homepage. Consider being a member. And one thing I forgot to mention is we have a really good Discord going, and you get invited to the Discord when you become a member. You get the tool sets that I use when I analyze stocks, and you get invited to member calls. So consider it. It'd be great to see you guys join, and you guys can get on the member calls. So give that some thought. You click on the join button, and you're off to the races. So take a look. All right, everyone. Good to see some old names and some new names as well. And I'll be streaming. Am I going to be streaming tomorrow morning? I am going to be streaming tomorrow morning. So I'll try to publish the time. It's going to be 9 a.m. Eastern, 6 a.m. Pacific. So if you want to join me in the morning, you can. And then I'll stream probably on Thursday evening, possibly on Thursday morning. But I have to set my calendar. And Thursday night will be for a simplified investing live stream. I'm going to do everything on my mobile phone. It's going to be an Android. Hopefully everything goes off without any problem, but I got my iPhone as a backup since it's week 1. But I've got the app running. I just have to figure out how to get it to mirror, and I can show you what I'm doing on the phone. So tune in if you want a simplified investing live stream. That'll be Thursday night. It'd be great to have you. And check out my mobile app. It's in the details of the live stream. If you download it, download's free. And then if you want to be a VIP, it comes with a lot of perks. So give it some thought. All right, everyone. Well, have a good night. Thank you so much for tuning in, and good luck with your investments.